All right, good evening everyone. This is Joe Henches with Beyond the Chart, and this is the technical analysis of the stock market today. Today is Thursday, March 6, 2014. All right, the Dow Industrials were up another 61.7 points today. Not a big move, a little bit of an expansion off of what we talked about yesterday, but nothing great, honestly. I mean, it looks like we have a little bit of a two-day compression, similar to what's in here. Again, I don't think there were any new major developments on the Ukraine. A lot of diplomatic talk back and forth. The big thing is a lot of people are looking at the jobs report this first thing in the morning, 7:30 Central Time tomorrow morning. From what I can hear, people are saying that some people are expecting less than 100,000 new jobs being created. And if it's less than 100,000, then it's going to be very disappointing. If it's, like around 150,000 or less, then people are going to start, well, it's the weather. I'm blaming the weather again. So I don't know if the weather is going to take the pressure off of this report or not. But other than that, we're still trending here above the 10-day exponential moving average. We've now got the 21-day, trending up, continues to push until the Dow Industrials get above this point here, the December 31st high. I've got to rule that this thing is taking leg one and leg two and then possibly getting ready to turn back down. Now, if it takes out this high, then we've got to totally reevaluate the scenario. Right now, that's the way it looks to me. And then when you go to the SPX, the SP 500 looks like it's trying to complete its fifth wave. Now, the thing that was interesting today, I had 1882 here on the chart, and this was at that 50% level. And these are measurements that I do on the Fibonacci based off of the entire move from 1 through 3. We project from 4, from the bottom at 4, and this is 50% of the entire move from 1 to 3. And this is 61.8%. So traditionally what will happen is that it'll either stop here at 38 or 50 or 61.8 unless it's extending dramatically, and which is a possibility here because we did not have a huge wave 3. It was much bigger than wave 1, but it wasn't an extended wave 3 by definition. So all that means is we're looking at potential stops, and I thought it was very interesting. And then, of course, we have wave 1, 5 equal wave 1 here at 1887.26. Now, it was real interesting. We got right to 1882 today, and we basically pulled back, bounced back up to it, pulled back, and rolled over a little bit. So it had a little difficulty getting through 1882 today. Let me scale off that, and that helps with that picture a little bit. Let's go to the Nasdaq. Nasdaq hasn't changed much. It's hovering right up here. This is the third day in a row, and here we had 5, and here we had 1, 2, 3, 4, 5, 6, I guess. So we're hugging the upper trend line, and not sure that we're really going to blow to the upside out of that, but we're going to find out real quick. The trend, we're starting to come down the 10-day exponential moving average, but we're still not below the red line, so we're still not getting a signal of an extreme reading. Volatility, the VIX bounced up a little today, but we're still down here in this range at the lower 14 level. The high-low index is in here somewhere, and the high-low index is not at an extreme also. But again, for given the move that we've had and you've gone to new highs, this has not gone up here to extreme readings. So that's a little bit on the negative side that we're not getting the power of new highs showing up as the indices are pushing to new highs. So that's another aspect that we have to take into consideration. Now let's take a look at the 3 ETFs that we look at. I want to start off with the semiconductors. Here it is. Semiconductors, look how strong this is. I mean, when you think about up above this point in here, nice push, consolidated, and continues to push high, continues closing on its high. So this is very positive. It's like it's telling the market, hey, this is the way up. I'm leading the way. Come follow me. It's that kind of thing. Now, the home builders started to do this, has pulled back, and it's a little bit of a consolidation, almost I don't know. I guess lack of better terms to call it consolidation type thing. I mean, you could draw some little trend lines in here and say, well, you know, across the top in here, and you know, maybe it's a little, you know, a pennant, but that's kind of stretching it a little bit. That kind of thing. And of course, that's hard to grab. But anyway, I mean, the thing is, it's up above the previous high over here. So now when we look at the financial ETF, this also in the last 3 days has really popped. Okay, 3 days ago it really popped. It's popped up to new highs. So it's kind of the, you know, the semiconductors are leading the way, the home builders, and now the financials are following along and joining the party. So it seems like the path of least resistance seems to be to the high side. Okay, now that's pretty much it on the market for tonight. I do want to talk about Valero, which I put out on the Trade Ideas website last night. I didn't talk about it in the video, but I put it on the Trade Ideas. I happened to see it later in the evening, so I posted it out there that I said, look, you know, this looks like it might be getting ready to go. I like the way this closed back above the 10-day, and so that's when I created this buy signal. I said buy at 50.86. Well, it hit that this morning. And so therefore we got into the options, the April 50 calls at $2.78, so $278 each. And they actually closed the day up over $400 bidding. So we had a really nice move. This looks like a Head and Shoulders consolidation. Okay, and you know, this is not a Head and Shoulders reversal, but a sideways consolidation. It looks pretty clear, and it's smashed through this trend line, this neckline right in here. And if you take this measurement and then add it right up into here, you get a projected target of 60.5. Now, we'll see if we get there. And right now I've got a short-term target that to probably sell half at, where is the target? Well, it's on the web page, in the Trade Ideas web page. I just don't have it in front of me. But anyway, so I want to talk about that. And then the other one I just saw tonight is U.S. Steel. I like the way, there's a couple things going on here. Okay, I like the way this has pulled back, and this entire move here, it's retraced about 50% of that move. And then this move down here, this second sell-off, okay, you came down here, you rallied, it didn't go, it sold off again. You're getting divergence on almost every indicator, okay? It did not go to higher, the DI minus did not go higher, the RSI did not go lower, and the demand index did not go lower when you went to the sell-off. So everything is kind of pointing and saying, this doesn't really want to sell off, and so now it's turned and closed above the 10. So I've got a buy point in here at 25.53, and saying if we hit that, let's go ahead and buy some calls. And I've got the Trade Idea specs out on the Trade Idea webpage for what I'm looking at. So we'll see if that can pop and break this trend line and head to the upside. So that's it on that, and we'll talk through all the rest of the Trade Ideas and things that happened on Sunday. Now Twitter, I think I got stopped out on Twitter at 55.04 this morning. I had set again, changed the parameter and said if it's one tick above the high, I'm out. Well, it hit that within like a minute or two this morning. It popped. I just didn't like the fact that we'd been in it 10 days, and 10 days really is about starting to push my length in terms of the time I want to be in a trade, especially if it's not working. So anyway, that's it for tonight. This has been Joe for Beyond the Chart. We'll see what the jobs report has in store for us tomorrow morning. Have a great Friday, and we'll talk to you this weekend. Take care.